All right, good day, everybody. Thanks for being here. My name is Sam Raposo. I'm the admin of the Option Wheel Strategy Group. And today we have another interview. I expect to be another great interview by the comments that we got on the Facebook group when I announced this interview. I'd like to welcome Tom King. Tom, welcome, and thank you for accepting to take the time for having this interview.
Yeah, no, great to be here. I'm excited.
Right. So we have a lot of fun and interesting stuff. You do a lot of stuff that I think a lot of people are asking questions on, and we're gonna get to talk about all that. But first things first, I always ask the same question to all my interviewers. How did you get started in options? Like, where did it all begin? And tell us a little bit more about that.
Yeah, I think it began back about 1984. So I'm older than most of probably the people watching this. But 1984, as I was heading off to college, uh, started. My dad would invest in a few things here and there, and I got interested in it. And I love to read, so always looking to read and see what I can learn. So while in college, read a bunch of books, started to do some trading. Uh, and I probably like everybody when they first start, it's all stocks, and back then it was like, oh, you're gonna buy in this company called Intel, and everybody knew Intel back then. There was Intel and IBM and GE and shortly after college, got involved. I'll tell you one thing that really drove me, and we talked about this. It might have been in something in wheel trading in the Facebook group, but I think Lance might have brought it up. But he posted a book, or somebody showed a book of like an old Wade Cook trading book. So Wade Cook was teaching, covered calls heavily back in the day, and I think Wade eventually went to prison for tax evasion. But anyway, got me started in looking into options, and I was really intrigued with the whole covered call thing. And hey, I've got these stocks, I'll start to write calls on them, and then it started just to evolve into trading more and more options. And I had some mutual funds and some other things back then, but I really probably by about 1990 or so, I was much more heavily into trading, and I started to get rid of all of my mutual funds and all of these stocks, and I started just trading options. And as everybody may do, you buy some. We started buying options, and maybe I'm a technical analysis guy, and I'm gonna look at these screens, and I'm going to figure out exactly what's going to go up, and I'm going to be right and make millions of dollars buying these options. And it doesn't always work that way. So that really got me into it, and spent a lot of time, making a bunch of money, losing a ton of money, making a ton of money, losing a ton of money, and didn't get consistent for probably a good 10, 15 years till I really started to get it consistent. And I transitioned into selling premium more, and that's really where everything changed. I think Tasty Trade had a lot to do with that. Not that I use Tasty Trade methods for the most part, but they trade small, trade often, and premium was pretty much the mantra that got me going. So it's been a 30-year option journey, and I don't own a single stock, a single mutual fund, not in an IRA, not in a trading account, not in any other investing accounts that I have. Everything is completely options based.
So you're 100% options.
100% options in anything that I manage.
That's great. How much time do you spend in trading and doing all these? So we're going to talk about strategies. You have pretty interesting strategies, and I have some questions because I don't fully understand them. But how much time does it take you to trade? Are you doing this full time? Are you doing this part time?
Great question. So it's a good chunk of my income. It's a good chunk of what I do. However, from a time standpoint, it's a couple hours a day. I don't have strategies that I need to do massive technical analysis and research and trying to find. I'm a premium seller, and premium seller, I don't need to do a lot of research. And because almost everything I trade is a S&P 500 derivative. So I'm either trading SPX, SPY, MES, ES futures. Most of my trades are all based on one index. So there's not a lot of research I have to do. Now, wheel trades, yeah, those are something that I'll do a little bit of work on, but I don't try to put on like one a day. There's only a handful of those wheel trades at any given time. But because most everything is based off of one index, requires a lot less time.
So, sorry for my ignorance, but what's MES? What's that MES? Is it an ETF or is it?
MES, those are the micro E-mini futures.
Oh, the mini.
So you've got ES futures, which is the E-minis, and then you have the MES, the micro E-minis.
So sorry, what's that in other words? Are we going to talk about that, or are you? I know you have some stuff to show us, but can you talk?
Yeah, absolutely.
How does that work? The minis, MES. I don't know how to call it. Sorry.
Right. So you've got you start with the the big daddy of SPX, and
Yeah.
SPX is a big product. So there's things you can do in it. Selling naked puts in SPX is not something that everybody can do, and it requires a lot of firepower to be able to do that. So you've got SPX as the granddaddy. Then as you dial down, you've got SPY, and everybody's pretty familiar with SPY. It's a smaller product. So for some people, that's a good product for doing some things in trading SPY. But selling naked puts in SPY for some people, it's also out of range.
Yeah.
It's still a hefty product. Then you can dial down into futures below that, and the E-mini futures, slightly smaller product than SPY. But it's a futures product. So now we're no longer talking about, the derivative of, using SPY of the SPX. We're now talking futures, which are a little bit of a different type of an animal. And MES is a smaller version of ES. So you have ES futures that many people might be somewhat familiar with, and those trade in 50 lot quantities, whereas SPY is 100 lots, or most stocks that you sell, it's one contract equals 100. Well, in the futures, they can vary. In ES, it's going to be 50 lot. And in MES, it's a little smaller. Those are 5 lot versions of SPX. So it's much smaller, but what do so they're easier to trade for smaller accounts potentially, and they're easier to trade for certain things that you do. But futures are also based on what's called span margin, and which means your buying power or your margin can change based upon the risk to your overall portfolio. So your buying power, if the market starts to to dive, what's the market down today? 6 points, 6-7 points right now as we speak. It's not a huge down day. That's a small percentage move on the day. So we're now talking, okay, we got a 0.15% move. That's not going to affect your buying power greatly. But if we're selling off 1-2 points a day for several days, we get to 5-10% down move. That margin requirement is going to increase as those puts, gain in value. So not only are you losing money if you sold the put slightly, but you're also being hit for more margin. So it's something that you have to really be aware of, have to understand how to control it, and you have to have, I think, really good hedging in place in your portfolio.
Very, very interesting. So to go back to the question, how much time do you spend in trading? You would say a few hours a day. So every day you log in, you look where you're at, you do some transactions, yep, and then you go and do your regular day.
Yep. So that's pretty much it. And I'm part of a service out there. So I interact a lot with the members there. I post my trades so everybody sees what I do. But I spend time interacting with the members of the service too. We're asking questions, but it's how we learn too. I mean, I want to learn. I want my trades to be scrutinized. I want you to ask me, well, why'd you do that? Why didn't you do this? Well, I didn't think of that. I want, you need to grow. You can't think that you know it all. So I like to post my stuff more to get feedback, not about the Facebook hater groups and people that's dumb. Why are you doing that? I don't really care. I don't read most of those comments. But people that are smarter than me, I want their feedback on what do you think about this? Here, I'm going to experiment with this. So you're all, I spend more of my time interacting with people than I do actually researching and putting on my own trades because I want to learn.
Tom, feel free to name your service that you're part of, and we could put it in the description box as well if people want to join afterwards.
Yeah, absolutely. So it is the Mr. Top Tick service. So you can go to mrtoptick.com, and it's the Income Navigator service there, which is a premium selling group of people. So we're all about generating daily, weekly income, and it's all about primarily premium selling. We'll do some other strategies in there, but yeah, if people want to take a look at it, certainly feel free to. It's a great group of people because one thing and I coach people for a living in other areas too. But if you're the smartest person in the room, you're in the wrong room.
Mm-hmm.
Right? I don't want to be the smartest person in the room. I want to be in a room with people way better than me, so that I can learn something. And that's the whole reason behind it. I would rather pay for some additional education as well. I want to learn from other people, so I'm willing to spend money to learn so I can become better.
It's funny because that's the reason why I started my Facebook group. I wanted to reach out to smart people out there so I could learn more about options, and then we did definitely get smarter people than I did. And people assume that because I'm the admin of the group that I know it all about options, that I'm a guru about, and I'm not. I don't consider myself to be a guru. There's smarter people than me, and that's the beauty of the group is that. Mm-hmm. We interact, we learn from each other. People challenge others. Hey, why don't you try this? And what about this? And that's where I think we all learn and we all enjoy.
Which is great. So I'm in a lot of those groups just because I want to learn. I want to see what other people are doing. I'm looking for ideas, but I'm looking for I'm always looking for knowledge. And you spend a lot of time on just research, trying to learn and understand your industry. And for a lot of the new traders out there, they've only been around for a couple of years and they're having great success because, hey, the market never goes down.
Yeah.
And man, these wheel trades, this is a piece of cake. Man, I can wheel Mara and I can wheel Riot and I'm going to buy AMC stock and nothing goes down. So you get a lot of geniuses that have only been trading for 2 years. Well, wait till the market has a sell-off year or wait till the market goes down 10, 15%. And then all of a sudden there's like no members left in these groups because no one's ever experienced these things. But I want to find those people that have been around for a length of time. I mean, I've been doing it for 30 years. I still am not even, close to knowing what all there is to know. I want to find those people that have been around, experienced the ups and downs, and can help me improve my overall game.
That's awesome. You're talking about that it's a big piece of your income, and I don't want to get into personal information, but do you reinvest all your gains, or do you keep some for yourself? Do you have like a specific way of doing this, or whatever you need? If you want to do, I don't know, you want to bring your family to a vacation, you just take the money and go. Like, is there a way that you kind of structure yourself for that?
For the most part. And so to backtrack, I mean, I'm a firm believer in multiple streams of income. I don't want to be just a trader and only live on trading income. So I do some consulting, I do some real estate stuff, I do some other things as well. I want multiple streams of income. I don't want one source of income, and I don't want that income to be, with an employer. So I don't work for anybody. I have my own businesses, my own companies. And so all these things are done, but I'm looking for multiple streams of income. I try not to touch the trading gains as much as I can. I try to use those other sources to feed my daily, expenses a bit, and I want to have other money running into, but I'm all about enjoying myself. So I want to take a trip to Florida. I've been in Florida, I think 5 times this year already. Whether it's going to go down, you're going to rent a boat, you're going to go on the beach, you're going to rent a condo, you're going to just stay in a hotel and chill out and do whatever. I want to be able to go wherever I want to go. And the great thing about trading is I can head down to a condo, sit there at the pool of the condo. I can pull up my laptop. I can make a couple trades. I can be done for the day, and I paid for within that week. Hopefully, I paid for that entire trip.
That's awesome. That's awesome. Um, all right. You made a comment on the group and it generated a lot of, not a comment, you posted something on the group that generated a lot of comments. And I'd like you, if you can, for you to walk us through that. You were able to get, like, you bought a leap, but you sold some puts to kind of pay for the amount of the leap that you paid, and you kind of got the leap for free. You remember
Mhm.
what post
Yeah.
that was, and can you walk us through a little bit of what was that strategy, or what did you do there?
All right. So we'll talk about this. So this, I mean, and again, nothing I do did I invent. I just, I'm a collector. So you can't reinvent the wheel. Options are not new. Options didn't get invented 2 years ago. They've been around for a long time. There's a lot of smart people that have figured some really cool stuff out there. And I just want to learn as much so I can see, oh, that's cool. How can I do that? Does that fit my style? So everything I've collected, I bring it in, I try it, and then does it fit my style or no? If it doesn't, I get rid of it. So there's always something new. And one of the things that I really latched onto the last few years has been they're out of the money leap spreads. So that's the basis of that. And how it works is I'm finding a stock that I really like. I think I'm not sure what I posted in the group. It might have been on SoFi. It might have been on Palantir. I
Yeah.
don't remember which. I've done it on MicroStrategy. I've done it on a variety of trades here. I'm actually going to pull a couple of them up, and I'll take a look at what I have here. And I've got one on Nvidia right now. PayPal. So I think PayPal might be one. Now let's take PayPal because it's down good today. So this will be a good one to explain what it was. So I like PayPal. I believe in the company. Did I do a lot of research on it? No, I'm not a huge fundamental person. I'm more of a what do they do basically, and then I price is everything. So to me, price action chart is everything to me. So I'm taking a look at PayPal. I'm going to bring it up here. If we need to, we can actually share some screens and take a look if that helps. In fact, let me see if I can share with you guys, and I can walk through a little bit of what it looks like, if that's cool. All right. So here is a chart of PayPal. So I like PayPal. I like the way I like the company, and it has taken an absolute drubbing. I'm taking a look at the overall weeklies, and hopefully this makes some sense. But PayPal's, from the high here of about 310s dropped all the way down to about 200. Looking back, this is a weekly chart. So, looking back here, 2020, there's some potential support in here, maybe at this level. So that might be a potential level. And I'm just looking to see, have we reached a point where now the risk reward's low? Because I do like it. I want to get into it. So I may take a look at the weekly. That looks nice. Let's take a look at a little bit more of the more recent price action. And it's been holding this 200. It's been bounce, bounce, bounce. It made a little run, and today is a pretty good drop day. I don't spend a ton of time analyzing things on technical analysis, but what I do watch is, here's the TTM squeeze for those that may be familiar with that. I don't want to go into that, but you can see red is usually when it squeeze fires in one direction to the downside, and then the light blue to the upside. But you can see it started to reverse, which means the momentum to the downside has started to potentially stop. Same thing with MACD. MACD is also the momentum has started to switch, and this thing may break positive here too. And I've got RSI and stochastics now coming off of the lows. Is this a reason? Right now, I think this is a perfect wheel trade. So I think this is a really good spot to sell a naked put. But I like the company for long term, and I think this is a good option, a good way to get in. So that gives me a chance to take a look at getting in on that particular trade with you. So there's a little bit of a background with it. And then if you want, I'll walk you through the actual trade itself here. I'm going to reshare. So hopefully this is working fine, and you can see what I'm doing.
So far, so good.
Right, so let's take a look. We're going to take a jump into the Tastyworks platform here, and let me screen share that. All right, so I hope you're seeing my Tastyworks platform. And then with this one, it's I'm going to look, typically, I want to add this out of the money leap. Where, and usually I'm going to take a look at somewhere between 45 and 65 days and look at what the expected move might be. So you can take a look here. I mean, obviously it looks like it's about 16 points from about 205, which means 220 is the expected move or so on. It's just a rough guesstimate. I'm going to go out a year or more on this leap, and I'm going to look to put on potentially, I'm going to buy the 240 leap because I think we can get there potentially in the next month or two, according to the expected move. Now, whether we get there or not, I don't know. If I knew, I would buy a lot more shares. Okay, but I'm going to buy the long call right here at 240. If I did it today, I'd spend about what 1875 or so for that. So I'd be spending about 1875 for that. It cost me 1900 bucks or so. So I may put on a good handful of contracts in there. So I'd like to leg in. So I did 2 contracts here. I might do more. In my IRAs, I'm already in this with a lot more contracts. So this is just my trading account, which is more premium than this, but it's something there. I will then look to sell something about 20 to 25% higher. So if we're at 240 now, and we want 20% more is about 50 points. So what's 50 points higher? That may put me right up about 290. So what 280, 290, somewhere in that game at 20%. I'm going to look to sell this call for $19 or whatever I paid to get in, which makes it a free spread at that point in time. Same expiration, but I'm waiting until this thing moves up, and hopefully it does. If it doesn't, I'm okay with it for the long term for now until something goes horribly awry and changes my mind that I don't want PayPal. But it's a good mover, and I'll look to buy here around 18, 19 today. And then when this 280, I may put an order in to sell the equal number of contracts here for the same price.
I understand. It's not okay. I thought this was a same day transaction. So this is
No, it is a multi-legged transaction. And what the key is it becomes a free trade at that point. So it becomes a free trade, which, because I sold, the call for what I paid. It's a free trade that's now potentially 40 wide times 2 contracts right now. So at 40 wide times 2,000 shares, right? Or 200 shares. So you get 40 wide times 200 shares. I mean, we can all do math, but that's an $8,000 trade that hopefully in 430 days from now, we're at 280 or better. If we're at 280 or better, it pays off at $8,000. And also, in many cases, I'll look to sell that 280 call for slightly more than I paid. I mean, I like to keep it close, but if I'd taken a couple extra $100, I actually get paid to put the trade on. So now not only am I going to make $8,000 if it goes there or so, I got paid to do it, which gives me an extra couple $100 of income now by putting that particular trade on. And then I just sit and let this thing percolate. It's going to go up. It's going to go down. I don't get too worried about it. I just stick with I'm an emotionless trader, so I don't care. As long as nothing fundamentally happens, I'm just going to let this thing go. Maybe at 90% gain, I may look to bail out of it, but it's not using any buying power, and it's just sitting there. Right. But your risk is in the first couple months.
I actually like that. So what are you going to say to people who say, yeah, but if PayPal goes to $350, then you lose all that money that goes up, and from the 290 all the way to the 350.
You're right. I will lose anything above that gain, but you know what? It didn't cost me. I got paid to put a trade on that's going to give me $8,000 to do nothing in a year. My IRA is littered with them. There's got to be over 10 to 15 of these types of trades or multiple contract trades in my IRA on these things, and that's what drives the IRA. Well, the biggest thing is to me is not what happens if it goes to 350. If it goes to 350, I'm ecstatic. I've got an NVIDIA one on right now that's way over the call strike already, and I got another year to go. Okay, but so what would you do in that case? Maybe you put another one on.
Yeah.
Okay. The other thing you can do is if the market pulls back after you put that call on, you can maybe buy that call back on another move up. You can sell the call again. So you can sometimes move in and out of these. The biggest thing you're going to look at is what if it goes down? What if it goes down 20 points or 30 points in there? Yeah, okay, then maybe I'll buy more because I only legged in with a smaller portion on this. I may buy more, average in if I still like the trade. But I have a year and a half to be right in a bull market.
That's awesome. And what if you're not right? So let's say it never reaches that 280, it stays at 250. Then everything expires worthless.
No, well, at 250 on my 240, that one's going to be worth $10 a share. I'm only going to make $2,000 for free.
Yeah, for free. Yeah,
I'm okay with that.
Yeah, absolutely.
If you do that 10 times, with 10 different stocks and you only make $2,000, I don't know what your size accounts are, but I'll take 20 grand for not spending a lot of time sitting there and worrying about what is my, the market went up today, I don't really care what the market did. Okay. That's an IRA. You do some of those in a trading account too.
That's very, very cool. Okay, so we already talked about the MES strategy. Is there anything more that you wanted? I know that I asked specific questions, but was there any presentation that you wanted to do around that, or it wasn't around that?
I'll give you a quick idea of the trades that I do, so that you've got an idea of what it looks like.
Yeah.
And I do this just so that people have an idea of what I'm doing and what the heck's this guy talking about. And it makes no sense. So because it's a stupid name, I call it the octagon of income, because there happens to be 8 trade types in here. And I always love the movie Octagon with Chuck Norris. So if you haven't seen it, go check it out. He beats up a lot of people. Anyway, and that's what we're doing here is I'm hoping to beat up the market with 8 different trades that we're going to do.
Cool. Tom, before we get started, are you able to put this in presentation mode so that people could see it bigger a bit? Because we're seeing we're seeing the slides on the left, just to kind of put it full screen. I'm not sure.
Yeah, let me see if we can do that for you.
It'll be easier for our viewers. If you can't, we could.
Yeah, I'll do it here. It just takes a second to full screen and then switch my screens. So, okay. All right, there we go. So you ready? Is that helpful?
Yeah, beautiful. Thank you very much.
Perfect. All right, so there's 8 trades that are part of this ensemble or grouping of trade strategies. And for me, I just want to generate consistent weekly, daily, monthly income. But for me, it's all about generating income. I do not get wrapped in percentages. I don't care if you made 10% on a trade that took 2 days. Okay, big deal. What I want to make is X amount of money every month. Okay, I need to make X amount of dollars, and this is what I put together. The first ones are daily MES trades. And the way those work, and I'll break these down into how this works in a minute. Daily MES is I am selling a put every day, Monday through Friday in MES. So I'm going to sell a out of the money put. In the money put on those, and I'm going to sell a put every single day, naked in MES. And I'm going to take those off. And I typically go out 60 days on these puts, and I will take them off around 30 days. Once I have an entire month of trades, which is 22 trades roughly, once I have 22 trades on, then every day I put one on, I pull one off. Put one on, pull one off. It's daily income. I used to do a lot of the zero DTE trading style stuff that many have made popular here. And I just found, to me, it's way too stressful. It requires me to sit there every day and look at the look at the screen and worry about, oh man, it's getting closer, it's getting closer, it's getting closer. That's a terrible way to live. So now a lot of people make great money on that. And I know Tammy Chambliss and others really perfected that, and they've got a great thing going, and more power to them. I can't do it. It's just not me. So that's the daily MES trade. The weekly ES trade is the same thing. It's just a bigger, it's a a bigger underlying. So I only do these weekly, but I'm putting one. I'm selling a put 1 week and taking it off the next week. And I'm really doing both of these. The same type of thing. You're investing in two different things that are in the same underlying. Basically, they're all SPX. What if SPX tanks? Yeah, you need to be prepared for that, and I'll talk about that later. But I'm looking to see how the weekly performs to the daily, and so far both have been doing well. So I'm just leaving both of them on. So weekly, I have 4 of these trades on, one every week. I pull one on, take one off, put one on, take one off. That's it. I make money every week. Then I do a 90 DTE strangle in MES.
So just a quick question on those two. So
Yes.
I know the answer, but maybe it's not obvious for our viewers. Which one are you taking off?
I am taking the most profitable one off every day, not the oldest.
Cool. I think it's important to ask that question.
Absolutely. Most of the time it is the oldest, but sometimes it's not. Okay. So I'm looking at percentage gain, and I'm taking the most profitable MES put off every day, and then I'm putting another one on at the right area.
What's the area? Maybe I'm getting too ahead.
For MES, typically it's 10 delta.
Okay.
And for the weekly ES, it's around 7 delta. I haven't moved to the 10 delta on the ES because I can get further out, make more money on ES. Anyway, it's a little bit bigger product.
So usually these have a tendency to expire worthless.
They could, but I'm only taking them off. I'm taking them off usually around 30 days in. So these are a 60 DTE trade that comes off somewhere around 28, 29, 30, 31, 32 days. So roughly 30 days in the trade. I do not take them to expiration. And usually I collect around 80% of the premium in that time.
Oh, interesting. So a lot.
Yeah. And I think people have a misconception that I need to trade shorter term, things, 30-day or 15-day, or, as Tasty trade 45 days. I found you can get almost the same. And Captain Jones and I have gone through some of these as well and some of the Facebook groups, but we found that we can get a lot of the same decay at 60 days, and I reduce a lot of my gamma risk, and they don't fluctuate as much with a change in the market like something that's only 15 days out. I'm not going to get hit with a huge move on something. Market could go down 100 points today, but these aren't going to move quite as much. Because they're 60 days out or 50 days out, or by the time I take them off, they're 30 days out. So that some of that risk is gone in the stock, but you'll get about 80% decay in that time period. ES, yeah, about the same thing in that 30-day period. I get actually a little bit more, but it can be up to 90%. Sometimes it's 91, 92. Sometimes it's 78. If the market goes down, then maybe I'm only getting 60% on that day when I'm taking one off because we gave back some of the gains. But there's usually a good gain.
Sorry, yes. How far are they?
60.
60 days is okay as well. Okay.
Yep, they're the exact type of trade.
But they're higher amounts, and you're around 7 delta in there. Interesting.
Yeah, about 7 delta in ES, and then 90 DTE MES strangles. Those are around 6, 7 delta calls and puts in MES. Those I take off at 50% or at 21 days, or I'll close it at a 4x loss. But those strangles I put on, and they've been a good trade. And again, did I invent that? No. So it's something else, and that was actually a Don Kaufman strategy that I think he was talking about at one point in time. And I tried it out, and I really liked the way it worked. So,
quick question on the strangles. I've never did one, but what scares me, and if I would do one, I would want to own the shares or the underlying. All right, like you're selling a call naked.
Yep.
So say it goes up really really high. Is that
Yep.
a
And hence the stop loss. So there's a 4x stop loss on those. If the market's been only going one direction, and these still have not been at 90 days out, you're getting pretty wide. It may take longer to get to 50% profit, but the market will at some point give some back, and time is going to decay. So you got theta working for you. You've got time working for you in these as well. And I've got hedges and other things on, but I'm not
too worried about that?
I'm not too worried. If I lose one, it's going to wipe out a couple of other ones, but it's okay.
Good.
Then I do a 1-1-1 trade in SPY. I don't want to go too deep into these, but the 1-1-1 trade, I love this trade. It's one of my more favorite trades. But this is in SPY. We're putting on a put debit spread financed by a farther out of the money or a farther out put that we sell to pay for it. So it's a little different type of a trade, but it's something that can certainly pay off nicely. You get a little bit of a credit for it. And if we have some time today, depending on what we're doing here, I just put one on this morning. I'll show you exactly what I put on, so you can see exactly how it's constructed. But it's a 5 wide debit spread that I pay $1 for, and I sell a put for $2 farther out to pay for it. So I take in a $1 credit, and I may do multiple contracts. And what it creates is a giant bear trap type of it. It creates a trap out there that if the market only stays the same or goes up, I'm going to keep my dollar credit. If the market drops 5-10%, it's going to put it into a bigger trap where I can now make a couple $1,000 if the market drops. So it's almost like getting paid to put on a hedge. So it's an income hedge almost.
Wow.
Not complex, just sounds like it. Super easy trade, but pretty good buying power. So it's about an $8,000-9,000 buying power trade. But if you do 2 contracts, but let's say at $1 at 2 contracts, you're going to take in $200, right? $200 on an $8,000 buying power trade is 2.5%. And so even if this thing goes nowhere over the course of a month, I'm still making 2.5%, which is 30% a year. If the market drops 5-10%, I could be making $500, $600, $700, $800, $1,000, $2,000 on that same trade. I've not had that, pay off the full amount on it, but we've had some that have paid off pretty well. That makes sense.
Yeah.
The next one here, really quick, is the what we call the big ass bear trap. And being politically correct here, it's a very similar style trade, but it's like an iron condor of all puts. So it's a put condor. But what we did was we sold twice as many of the farther away from the money strikes. So we took in a much bigger credit on it. So because of that, you're wiping out some of it's not a real big income trade. It's going to make maybe a couple bucks. It's $60, $100 or something like that. The big benefit of it is that you've got a gigantic trap that if the market sells off 5-10%, you've got a huge, or 15%, you've got a really nice hedge that's going to pay you really, really nicely. Now, it's going to suck up some buying power out there, but it's okay with me because it's worth it to put on some hedges for, again, these 5-10% drops, which offsets. And again, this is not my main hedging strategy, but instead of just letting my money sit there out there, I'm going to put some of it to work. And then obviously wheel trades, which everyone's familiar with. These are in order of importance to me. And then those free OTM leaps that we talked about, and then spec trades at the bottom is essentially just whatever I want to play with. I want to put some butterflies on. I want to put credit spreads on in Tesla or something like that. Whatever it might be, those would be just kind of fun money. Technical analysis says this might do well. I'll do something.
So
and here's a little bit of how this whole thing works, just really quick.
Yeah.
And that's a big account. So assuming if you had a $150,000 account, you can't do all of these things in a small account.
Okay.
So you have to figure out your size and what you can do. But if you had a $150,000 account here, if you were doing the daily MES and making $170 a day, it's going to use up about $22,000 in that margin to do, and you can generate around $800 a week. Then those weekly ES, those may pay off. One of those each week is going to pay off maybe $400, and that's going to chew up about 20K margin to have 4 of those on. Your strangles, one of those will come off each month. I usually keep 3 of those on at any given point in time. They cost about 8K in margin to have those on. You might make $1,000 a month on it. The SPY trades, little bit of income, but great hedging availability. They will chew up some margin, as well as those big ass bear traps, which don't make a lot of income. That's not primary income trades. Those are a little bit of income, a lot of hedging. And then depending on how your wheel trades do, can you make more than $800 a month on 10,000? You sure can, but I'm not trying to make 20% on a wheel trade with it. So that gives you a little bit of a sense on how these all work together. And then there's 3 hedges in the strategies that I use. I use a VIX call vertical spread that I have multiples on. I use the risk twist spread in SPY, which I don't want to go into too deep on these. And then there's a black swan hedge that we use in ES that works really, really well. That's basically a free trade to an extent as well that you can put on. So those hedges will cover a lot of the other things that I'm doing as a whole. So I want to make sure that the VIX hedges a lot of those MES trades, because the VIX is quick. If the VIX drops right now today, or gains, it's at 16.70. It's up a whole 36 cents today. But I'm typically putting on a 25-35 spread. So if VIX shoots to 30, the gain in my VIX spreads is going to offset most of my losses in the MES if I have to stop out at a 2x loss. So I'm hedging those types of trades. And to me, hedging is simply an insurance expense that's part of a business. I run this like a business. It's money. It's money I bank on to pay for things. It's money I bank on to feed my IRAs. So I need to be able to make X amount of dollars a month, and I'm willing to buy insurance to make sure that I don't give it back, because I hate to lose money.
So you're kind of covered in all angles. Like right now, you're making your monthly, weekly, daily income, and tomorrow there's a black swan. Market drops 20%, 30%. You're backed up with your edges.
Yeah,
and you make your money there.
I could make more money on a 10-20% drop than I will on all the other income trades combined. So, if the market drops 20% tomorrow, I would be done trading for, not because I lost it all, because I made enough money to take the rest of the year off. Would I do that? No, I'll continue to trade. But yeah, you have enough hedges on that didn't cost me a lot of money. It's just a business expense. Yes, it's a drag on portfolio. There's a fee there. There's an expense. It's any business. You would not build a business without having some insurance.
So let's say there would be a black swan. Would you try to sell those other positions to kind of get out of them and just keep your...
So there's stops. There's stop. Those MES trades, there's a 2x stop on those. So there's 22 trades to bail out of. Now, does the market go down 20% in one day? Typically not.
Yeah.
Now, there are things that can do that. So you've got COVID, you've got, who knows, being elected president or something. Who knows what could happen?
Yeah.
So the market can we've seen big drops, but it typically is going to gradually move down. But if it doesn't, I've got to stop. I'm going to stop out. I'm going to close those trades. The hedges are going to help me offset it. Maybe there's a give and take there. Maybe there's a little bit more of a loss than a gain, depending on it. But overall, I'm trying to mitigate any major damage.
That is really good. I've never seen a good plan like that in terms of with the edge. So I actually really like that. I'm going to have to look more into that. You said you might walk us through the SPY 111 trade. That you want to walk us through that? Or?
Yeah, let's pull that thing up and let's take a quick look at what we did today. I'm going to remove the. Okay, so let me. We'll rescreen share and let's run through SPY. All right, so hopefully you can see the Tasty Trade account here.
Yes.
All right, the way this SPY 111 is going to be put on is it's all puts, and I want a 5 wide vertical. So let's start here, 460, 465. I'm going to put this vertical on here. Now it's $1.50 right now, right? So I want to be around $1 is what I want it to cost me. So we're going to get a little bit farther away. That's a little bit too much. All right, so we're around did I not get 5? Let's use 98 cents. So we're close enough, 97, 98 cents. All right, so right now we're looking at the 451, 456 spread it's going to cost me $1. Now I want to pay for this by selling something that's worth $2. So this 423, I will sell that one. So now I have $1 credit. And let's take a look now. And you can add more contracts to it. Again, as I mentioned before, with 2 contracts, it's about a $9,000 piece. So you may have $200. That's dumb. I don't want to make just $200 on $9,000. Well, it's over 2% a month. It's over 24% a year if you did one of these every month. I think most people would be somewhat happy with that as one of your sources, but that's not where the magic also lies in this trade. So let's take a quick look at this trade. Okay, and here's how it looks here as well. So you can see that I call this the tail. So if the market does nothing but go up, I'm going to make $200 and some, right?
Yep.
If the market sells off, we start to get into this zone, which is what I call the trap. So these are what I call bear trap trades. To get all the way down here, this is 417 from 465. That's well over 10%. It's like a 15% drop. And as time ticks away on these things, and you start to watch that T+0 line here working. So as you watch that line working here, it's starting to tick up, which means now I don't have to always be in here. I can be close. So if the market only starts to dip down, well, now look, I'm making what, $500 on this trade. So if I want right here, I could actually pull $500 out of this trade right now on December 6th. Let's keep watching it go. Now I'm making $600 and not even in it. If I was in it here, it's only going to look like this, obviously, on expiration day. Right. So you have to really let these things play themselves out. I don't like, I made $100, I got to close it. No, I want to keep it running. Now you can also see too that if you fall quickly, well, then you can be in the red quickly. And now you have to make a decision as to what you want to do. That if we fall 10% tomorrow, then this thing is in the red by a couple $100 now. Maybe it's $500. It can be in the red by $1,500. What's the worst thing that could possibly happen to you in this trade? What's the worst thing?
You're asking me, sorry. So
yeah, I'm going to ask you what the worst thing that could happen to this trade would be.
Well, is if you would drop below 434, is that 420 maybe?
Yeah, you would have to be below 420 on expiration, right? Because I can let this go all the way. What's going to happen to me on expiration at 415? I'm going to get assigned
Yeah,
these two puts, right?
right. One at 450 and the other one at
Yeah, but I'm also that 450 is going to be worth,
more. Yeah,
I've already bought these two and sold
yeah.
this one, so that 5Y is already paid me. I'm going to keep my $200. So this one's out of it. I'm going to get assigned at 423. So if the market drops down here, I am going to get assigned a put at 423. And you know what? I'm happy to get assigned at 423. If you could buy hundreds of puts at 10% below the market price, what's going to happen to them most likely in a couple of years?
You're gonna make tons of money on it. It's gonna
You're
go
going to
fast.
make tons of money. So again, he who dies with the most SPY wins. So that's so I want to I don't mind owning SPY at a 10 to 15% discount. You're paying me to own SPY at a 10% discount to where it is today, which I know in a couple years
It's gonna
I'm
go
going
up.
to be back up. So I'm not afraid of this trade going against me. Uh, can it? Certainly can, but that's why I'm going to wait till expiration. I'm not going to worry about the fact that, oh, it's showing a $1,000 loss today. It is what it is, because the worst thing that's going to happen is I'm just going to get assigned puts, or I'm going to get assigned, those shares, and now I'm going to own it.
Wow, that's a lot of great information, and I think eventually we'll need to kind of go more deep one by one to make sure that all the members understand. And I'm not trying to ask you for other interviews, but you've shared with us a lot of good things today. For me, my biggest wow factor was how you're edging your accounts, so it could cover you in case something goes bad. That's actually pretty interesting, and that's something that I want to definitely look more into it. Do you have a second presentation that you wanted to show us?
No, I think that was pretty much
Okay.
it. I just want to give you an idea of how it was constructed. We walked through a handful of trades here today and gave you, there's a ton to think about. It's like drinking from a fire hose type of a thing. So we don't want to overdo it. I just want people to understand
There's ways.
what's
There's solutions.
what's available, what they can do with it. That it's not all about wheel trades, and not I'm never going to make 10% every single month for the rest of my life. I guarantee it doesn't happen that way. I don't know a single trader that's ever done that. Over the course of 20 or more years, where they're making 10% a month. Maybe there's somebody out there I haven't met. Love to meet you. So if you're lurking in a Facebook group, and not on a beach somewhere, I'd be surprised. But um, right now we're here all to learn as much as we possibly can, get as much info as you can. But the other thing here is, don't just take somebody's trades. I gave you like 8 different trades and 3 hedges. There's 11 trades there. They may not be right for you. Your account may not be right size for that. You've got to start to figure out what's good for you. Are you a premium seller? Are you a call buyer? Are you an in the money call buyer or an out of the money call buyer? What are you most comfortable with? Are you a 0 DTE trader? I'm not. I can't take the stress. I don't want to have to be glued to my screen all day when the market's going. It just went down 10 points. Oh my gosh, what's happening? Oh, it went up 10 points. I don't. I'm a very emotionless trader, but I don't want to put myself through that stress. Plus, I want to be traveling. I want to be on the beach somewhere. I don't want to be sitting, there with my laptop all day or my iPad. Figuring out, okay, hang on, we're not going swimming yet. We got, I got to wait 2 more hours to see what happens to my puts or my credits. Or, my calls are being, touched. I can't take it. So it's too much for me. But many people are doing it and having a great success with it. More power to them. There's a lot of great strategies out there. You have to find what's right for you and where you're comfortable with, and slowly evolve your trading style. It's taken me 30 years, and I'm still evolving. So
That's exactly my way of thinking as well. And I truly believe that that's the right mindset to have. You always want to learn. You always want to understand, challenge yourself, and you're also sharing your knowledge, which I really appreciate it. One last question that I wanted to ask you. You mentioned that you like to read books. Any books that you recommend for our members to get started in options or to kind of Anything that comes up your mind? Oh, you're looking at your library there.
I'm going to look at my library and try to pick one out here. But it was a great book. Now I'm looking for it and I can't see it. I mean, I think you need to look at some mindset books like Trading for a Living and start to get, look at some of those things, not just strategy books, but trading mindset books out there. So some really good, Trading for a Living is one.
In the zone that
the Nigerian brothers have some good books out there on how I trade options. Does it mean that I'm going to trade, something that's along their same trade? No, but I'm looking for mindset things. I'm looking for how they evaluate things. John Carter may have some ideas. I love the squeeze, indicator. I like some of what he does. I borrow from lots of different people, so I think those are some really interesting pieces. Lee Lowell has a book that's really good too. I don't know that I think it's. Sorry, I know this is not great TV here.
Oh, don't worry.
Taking a look. It's hard to even.
Is that the one? Get Rich with Options?
Yeah, that might be it. So really good stuff. I think there's 4 strategies that he does in that book. So all of these things you just keep reading. I mean, I have shelves and shelves of books here, and always reading something that's training related. But I found that you put yourself in some groups with smaller, smart people that you can bounce stuff off. I don't paper trade. I can't do that. It's not the same. I put real money at work when I'm playing with a strategy, and you know what? It might bite me. Well, I'll learn from it. So I don't mind spending money to learn. I don't mind trading real money and taking some losses here and there. We've all wiped out accounts probably in our lives at some point or another. It's not my goal to wipe out my account, but I'm okay taking some losses in order to make more gains down the road. And I've locked into something I feel comfortable with. Doesn't mean it won't change. And nothing works all the time. So next year, 2 of these strategies may no longer work well because of whatever.
Yeah, and you'll readjust. You'll make changes and
readjust. Know how options work. Understand the Greeks. Understand not just delta, but you can understand vega and gamma with those as well. How do those affect my trade? How does a change in volatility affect my trade? So it's not just delta, but again, gamma, vega, and the other. Understand how to adjust trades. When you understand how they're put together, and nothing I gave you was anything more than credit spreads and debit spreads. Okay? Just a version. Everything's a credit spread and a debit spread, just put in some different formats and different patterns to make a trade that works for something you're trying to accomplish. And then someone's going to tell you, if you're in a smart enough room, someone's going to tell you, well, you could have done this. Well, I didn't even think of that. Holy cow. I'm doing that now. And you do that enough times, you really, so put yourself in a room that has smarter people than you.
Interesting. Well, Tom, thank you very much for your time. Thank you very much for your sharing all your knowledge, all your information. I'm pretty sure you're going to get a whole bunch of questions, and on whenever I'll post this video on the group. And that was great learning for me as well. So awesome. Thank you very much for spending some time with me today and for sharing your experiences on the group. I really appreciate it.
Fantastic.
All right.
Appreciate it, Sam. Thank you.
Thank you. Bye-bye.
Bye.